Hi, how are you students? Today we are going to see the death of partners. In death of partners, we are going to see the insurance policy, life insurance policy payments, and other partners' interest capital, interest on capital, and sundry other adjustments. Include all inclusive in one account, right? So, bit you had to be careful when you are reading the question. Bit tricky uh, questions are there. You have to carefully read it and answer it, right? So, let us move into the question. Okay. In the question, they says A, B, and C are partnership sharing profits and losses in proportion of 6 into 5 into 4. 6 into 6 into 5 into 4, right? 6 into 5 into 4. They take out a joint life insurance policy for 200,000. 200,000 they have taken a policy, life policy, right? So funds and required to pay off the dues of a partner on his death may be available without presenting any financial difficulty to the firm. The annual premium of the policy is 7,500. Annual premium is premium. Premium is 7,500. Okay. Uh, and is treated as a business expenses. Okay, accounts are closed annually on December 31st. If it's closed on December 31st, January 1st it is the opening date, right? The partnership deed provides that the representatives of the deceased partners are entitled to: 1. The deceased partners capital as appearing in the last balance sheet, right? Interest on capital 6% per annum to the date of his death. His share of profits calculated till the date of his death on the average of the last 3 years profits after inclusion of the policy premium as a business expense, right? Next one is share of goodwill calculated at 2 years purchase on the average of the last 3 years profits before inclusion of the policy premium as a business expenses. B died on April 1st. April 1st. April 1st of April 1973. Right? He passed away. His drawings were 1970, they amounted to 3,000. Capital shown under the 1972 balance sheet was 80,000. 80,000 I have put it there. Right? The profits for the 1970, 71 and 72 after inclusion of the policy premium as a business expenses amounted to 75,000, 64,000 and 69,000 respectively. Draw up B's account due to his estate from the firm. B's capital account, right? So, first adjustment, deceased partner's capital as appearing in the last balance sheet, that is we have brought it, it was appearing as 80,000 in 1972. Interest on capital 6 per annum to the date of his death. Then workings, right? Workings, interest on capital, right? Interest rest on capital. Okay, interest on capital. Capital is 80,000. 80,000 capital and into 6 percentage of interest, 6 by 100 into 3 by 12, 3 months out of 12 months, right? He passed away on April 1st, then January, February, March, right? So 0 0 This is 2, this is 1, right? 2 into divided by 400, 400 into 3, it is 1200, right? Interest is 1200 rupees, right? Then interest on, right, okay, his share of profits calculated till the date of his death on the average of the last 3 years profits after inclusion of the policy premium as a business expenses, right? Profits, right? Calculation of profits. Second, of profits, 1973, right? Right. Year, and profits, right? Year 1970, 71, 72, 1970, 1971, 1972, right? 65,000, 65,000, 64,000, and 69,000. What is the 9, 9, 18 and 1, 18, 19, 198,000. 198,000. What is the average? Average, you go to 198,000 divided by 3, right? That is 66,000. 66,000. 66,000. The average, right? Out of his share of profits calculated till the date of his death on the average of the last 3 years profits, on the average of the last 3 years profits after inclusion of the policy premium as a business expenses. So here this is after inclusion of the policy premium as a business expenses. These are the amounts, right? Right, after inclusion. After, so this is after inclusion, 3 that is 66,000 into number of months. This is for the year, no? This is for the months, no? Right? Into, right? So profits for 3 months. This is profits for 1 year, right? This is for 12 months, right? Months is equal to 66,000, right? Profits for 3 months, for 3 months is equal to 66,000, right, into 3 upon 12, 3 upon 12, 4, 66,000 divided by 4, right? Then 66,000 divided by 4, in the sense 16,500. This is 16,500. 3 months is 60,500. Then B's share. B's share of profits. It go to 16,500, right, into 15 divided by 15, right? 6, 5, 15 into B's one is 5, right? 1 is 3, right? It is equal to 5, 5, 5,500. 5,500 per person, right? Then this is we have calculate the profits per the person, right? And they said in third one, share of goodwill calculated at 2 years purchase on the average of the last 3 years profits before inclusion of the policy premium as a business expenses. Before inclusion of the policy premium as a business expenses. That means profits, right? Third one, right? Third one. Calculation of goodwill. Calculation of 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 goodwill, right? Calculation of goodwill. Third one. In the goodwill, share of goodwill calculated at 2 years purchase on the average of the last 3 years profits before inclusion of the policy premium as a expense as a business, right? This is what you call year, right? Year, right? Profits premium, life policy premium, right? Paid and total premium, right? Because they says in the profits 19 year of 1970, 1971, 1972, right? In that says profits are profits for the 1970, 71, 72 are after inclusion of the policy premium. After inclusion only these profits are there. 65,000, 64,000 and 69,000 are after deducting the 7,500 only we have got, right? After deducting, but share of goodwill calculated at the 2 years purchase on the average of the last 3 years profits before inclusion of the policy premium. Before inclusion of the policy premium is what? 7,500, 7,500, 7,500. Before inclusion of the policy premium. This is after inclusion of the policy premium only this profits are there. So before inclusion of the policy premium profits, before profits before for inclusion of premium, for premium, right? So 72,500, right? 72,500. Okay, this is 71,500, right? This is 76,500. Can you understand? It's 69, 76, This is 71,500. This is 72,000. Right. So all you had to add it. 500. Right. Right. 500. 1, 7, 8, 9, 10. 0, 1, 1, 1, 1, 1, 1, 1, 1. 8, 15, 22. 222,500. Then average is average 220,500 divided by 3. 3 years. Right? That is 220,500 divided by 3. That is 3. That is 73,500. 73,500. 73,500 is the average profits. 73,500 is the average profits. Right? Purchase to. Right? So this is share of goodwill calculated at 2 years purchase of the average. 2 years purchase share of goodwill calculated at 2 years purchase of on the average. Goodwill value goodwill will equal to 73,500 into 2, right? 73,500 into 2. 0, 0, 0, 1, 2 into 3 is 6 and 7 into 4, 14. 147,000 is the goodwill value. 147,000 is the goodwill value. Right? So B's share of goodwill. B's therefore B's share of goodwill will equal to 147,000 into 5 upon 15. 5 by 15. Right? So 1 and 3. Right? 1 and 3. 3 what you call no, 4, 12, 27 in the sense 9. 49,000 is the goodwill value. 49,000 is the goodwill value. 49,000 is the goodwill value of the B's goodwill value. Right? B's goodwill value. B's goodwill value is 49,000. Right? So we have calculated the goodwill also. So we have finished the major amount. Now we have to do the postings. Right? When we are doing posting, all the amount payables are to the partners are credit balances, right? So interest payable is 1,200. Right? Interest payable is 1,000, 1,200. That means interest on capital. Interest on capital is how much? 1,200. Right? And other thing is profits. Profit share. Share. What is the profit share? 5,500 is the profit share. Profit share is 5,500. Right? All the workings are provided here. Right? 5,500. Then other one is goodwill. Goodwill goodwill for the person is 49,000 is the goodwill amount calculated for the period, right? This is the goodwill we have derived, right? Other thing, go through the question and see what are the remaining things, right? Remaining things is drawings is there during the 1973 drawings done, right? So drawings equal to how much? 3,000. Drawings is 3,000. 3,000 is the drawings, right? What else we have missed out? Drawings. We say the A, B, and C are partnership in sharing profit and losses, and insurance policy 200,000. So that 200,000 insurance policy we have to see, right? The cost annually. That B died on April 1st of 1970. His drawings is capital is this. Profits for the year this is this respectively, and premium policy premium or expenses this. That partners we have to see insurance, life insurance policy. Fourth one is life insurance, life policy, right? Life policy, life policy, because they have charged to the profit and loss, right? They have charged to the profit and loss account. Therefore we don't need to see for the reserves or anything. So we straight away we can calculate one 5 by 15 to 200,000. So B's share of life policy, B's share equal to 200,000, right, into 5 by 15, 5 by 15, that is 1 and 3, right? That is 66,667, right? We will see anyway, again we will see. I hope that is the amount. 200,000 divided by 3, right? Okay, 66,667 is the life policy, right? Life policy 66,667 is the amount payable to him, right? The amount payable to him. These all one, two, three, four adjustments are here. We have four adjustments. Here you see 1, 2, 3, 4. Four adjustments are there. One is extra information, right? So we had to balance it, balance the amount, right? 800, right? 700, 700 and 367, right? 367, right? 367, and one is there, 2, 2, 7, 7, 13, 13 and 22 and 2 is there, 10, 10, 10, 10, 10, 14, 14 and 6, 20, 202,000 and 367. That means here 202,000 and 207,000, right? 207,000, right? 207,000 and 367, right? You see 6 for 1, 2, 7, 7, right? 7 and 9 is 16, 22, 22, 22, right? 2, 2, 2, 200, 2367. Then here 100 and cash 3000. Then we had to say buy cash. Oh, they didn't say the settlement way of settlement. We say carried down, balance carried down, right? Balance carried down by 199,267, 367, right? Balance brought forward 202,367, right? Sorry, 199,000, 199,367 is the transfer. This is the amount due to the B. Okay, I understood the explanation. I have given all the workings in clear cut, right? First of all, when you are reading the question, you have to look for the information. What is the information given in the question? What is the information given in the question? In the sense, you have to search for the whether there is the interest calculation on capital, right? There will be a definitely there will be a interest calculation on capital. There will be a interest calculation on the drawings, right? Here in these questions they didn't give the interest calculation on the drawings, right? And third one is profits calculation and goodwill calculation of goodwill, right? Calculation of goodwill and revaluation of assets also may give. So these type of information, what are the informations are given, right? Here you have seen one in and what you call life insurance policy, right? Life insurance policy, premium paid and not paid. And when you are calculating this profits, goodwill, in goodwill calculation they said the premium which has been included in the profits has to be excluded, right? That excluded amount only has to be taken. So we have uh, excluded the deduction of the premium. So we have included the we have added the premium already. Premium had been credited to debited to the profit and loss account. So again we have debited, right? So profits will increase. So this is the increased value here. But whereas the calculation of profits for the year, right? Average profits in that calculation they says the premium should include the amount should be the average profit should include the premium. After taking considering the premium payment only, the profits should be taken for the average calculation. So there are two different ways they have given. They are twisting and they are testing your knowledge, right? So you must be careful on when the premium is included. You must be careful. This is the very toughest calculation. Here you may make mistakes in calculation of profits or calculation of goodwill, right? If you are clear, once you get clear on these calculations, you are okay, right? You will handle any type of adjustments in your own, right? So once you have both completed this sum, again, right, do the sum, right? Take the question and do the sum and see, compare your answer with my answers, right? During the comparison you can identify where you went wrong and you can adjust yourself and correct yourself, right? This is the very important question, right? Okay, I hope you would have understood and I hope to meet you in next lesson. Okay, thank you very much.